Hey folks, thank you for stopping by. This message is brought to you by yours truly, Daniel Morrow, creator of EliteClarity.com for all of your business financing needs, and thatphonesitesguy.com, your resident phone sites affiliate representative. I hope you enjoy this message, and I'll see you on the other side. Cheers. What's going on, everybody? Hope y'all having a wonderful day. Put my face over there. So, welcome to the first episode of Finance Friday. What does that mean? Every Friday, that means for you, every Friday, I'm going to go over finance tips. It's going to be a conversation. We're going to enter the conversation of money. That's it. Pretty simple and pretty cool, right? There's a lot that people know. There's a lot that people don't know. There's a lot of misconceptions, so this is going to be a way to clear it up, educate people. Hopefully, I can be a little bit entertaining. And it's been a while since I've done anything on the whiteboard. I kind of miss it. So I know a lot of people are visual. So let's get into it. Factoring, what is it? So, factoring, who is it for? Let's start off there. Some common industries. Some common spaces for it would be manufacturing, logistics, construction. Those are the main ones, right? I mean, there's more outside of that. I'm not going to list off every single thing, but think industries like that, right? Not necessarily higher ticket, but higher ticket, longer terms. Now, what does that mean? Your clients must be business to business or business to government, right? So if you're working with consumers, this is not the program for you. Your clients need to be on the business side or on the government side. Payment terms. They need to be net 30, 60, 90 or 120-day payment terms, right? So here's the thing. The most expensive money that you're ever going to have is money that you can't access, money that you can't utilize, money that you can't deploy. So when your funds are tied up in receivables, pretty draining on a business, right? It can create a lot of struggle. It can create a lot of conflict. It can really just be a pain in the butt. I got to get used to this small little camera thing. Can't really see my hands weaving around. I talk with my hands a lot. Maybe I'll need to find a better recorder app next time. Kinks to get worked out. That's cool, right? So those are some of the industries that it works for. You need to be working with business to business or business to government clients and be on net 30, 60, 90 or 120-day payment terms. So how does it work, right? What's the deal with it? It's basically, I don't like using the term advance, but it's kind of like an advance. So for easy math, let's say that you have a $100,000 contract and you're on net 60 day terms, right? So what that means is you're waiting 60 days to get paid. Well, guess what? You have mouths to feed. You have staff, you have clients, you have other obligations, you got bills, right? And having that money tied up is potentially pretty draining on a business. So we're going to go with 80% from here. All right, cool. 80%. And I'm just doing this for easy math, right? So don't take all this math verbatim, right? You're on net 60-day terms. So what happens is you apply for factoring, right? Super simple. What happens is they check the credit worthiness. I'm just going to put SC for factoring company. Checks credit worthiness of your client, which is pretty handy, right? How often are you working with people that don't pay on time, don't like to pay, or how many just overly delinquent accounts do you have, right? Being able to mitigate that or even being able to mitigate being able to mitigate that, being able to have a peek into what it's like is nice. I mean, naturally, they're not going to divulge that information to you outside of approved or denied. But if your client isn't creditworthy, chances are you're not going to want to do business with them. Period. That's it. Right? Why would you want to do business with somebody that's at risk of defaulting, not paying their bills, not paying on time, whatever, right? It's even more stressful than the situation you're already in. So they're going to check the credit worthiness of your client to gauge their ability to pay, right? How are they managing their money, right? The other thing is neither company, what's unacceptable, liens, judgments, bankruptcies. So any of those black stains, it's not going to happen. It's not. Sorry. Right? And excessive loans. So typically the factoring company, what they want to do is they want to be a first position. What does a first position mean? I'm glad you asked. They want to be the first loan, right? They want to be first on the books. So if you've got a merchant cash advance, if you've got anything like that, they're typically going to want that paid off before they give you money. I should also note that it's secured against your receivables. Right? Done. Pretty simple. There's a few other factors that go into it, but those are the main two that I like to bring up. I mean, how cool is that to be able to have your clients qualified based on like their credit worthiness, right? So if all goes well, if all gets approved, what's going to happen is they're going to advance up to 80% of the invoice. So what that means for you is 100K, 80%. What is 80% of 100K? This is why I like math. They're going to give you up to $80,000 upfront today that you can deploy within your business for marketing, payroll, inventory, staffing, whatever it is that you need, right? That's stage one. Stage two, 60 days are up. Client pays. Factoring company takes their fees out of the remaining 20% or $20,000, right? They take their fees and give you the difference. Simple, pretty cut and dry, right? That's it. There's really, I should say 3 stages, but I'm not going to break down the application process and call that a stage. I'm just going to talk about what happens after everything is approved, right? So stage 1, they advance you up to 80% of the invoice. Stage 2, client pays. The factoring company is going to take whatever their fees are, interest, la-di-da, and they're going to pay you the difference. And no matter what you do, somebody's getting paid. Somebody makes money, somebody is getting paid. There's always going to be fees. There's always going to be stuff there's always going to be stuff. There's always a cost to doing business. That's it, right? So what happens is the factoring company basically works as an intermediate. Third-party payment, whatever. So they act as a third-party payment collector, right? That's the word I'm looking for. I had a moment. So the factoring company works as a third-party payment collector. They assume responsibility for collecting and dispersing the capital, right? So instead of the client paying you at the end of the day when their payment is due for the services or work rendered, they're going to pay the factoring company. The factoring company is then going to disperse the rest of the cash as fit, as per what's ever in the agreement that you signed when you got approved, right? Now, here's the thing. Sometimes people get a little bit standoffish. They're like, oh, whoa. Well, I don't know if my clients are going to like that, right? Hey, I don't know if my clients are going to like the fact that they have to pay somebody else other than me. That situation is very far in between. 9 times out of 10, your client isn't going to care. They're going to understand you got bills to pay, you got obligations, you've got stuff that you've got to do in order to run your already successful business. That's it. Like, there's no ifs, ands, or buts about it. So if this helps you stay in business, keep your doors open, scale, grow, and guess what? At the end of the day, you're likely going to be providing them more business or doing more for them, right? You're going to be servicing them more. You're going to be quicker. Like, it's a win-win across the board. Not only do you get to know whether or not they're creditworthy and you should be entering into any sort of a contractual obligation with them, you're also going to, I just totally lost my train of thought. It happens sometimes when you're looking at your whiteboard. I'd like review as I talk. It's okay. I'm human. We're all human. So not only do you get to check out the creditworthiness of your clients, but like, you have more flexibility. You have more options, right? So as you can see, this is a very, very, very powerful program. It can be a very powerful program for the right business. Credit lines can extend up to $1 to $1.5 million, right? So what does that mean? It means when you get approved for factoring, think of like a line of credit, right? You have a line of credit and they give you a max dollar figure that you can draw on. Well, factoring works kind of the same. They're going to give you a credit line. They'll say we will manage up to $500,000 in invoices for you, or up to $1 million in invoices. So that means you can factor as many invoices as you want, but as soon as you hit that credit limit, as soon as you hit that upper limit, you got to wait until payments start hitting, right? Now, there are some drawbacks. I mean, if your client just doesn't pay, you're going to be on the hook to pay back the money, right? You can have some sort of protection in case of insolvency and bankruptcy, that kind of stuff. That's about the only thing that you can be protected from, insolvency and bankruptcy. So if your client, for whatever reason, they go belly up, you don't have to pay back what you were advanced or anything like that. But if they're just deciding not to pay and whatever, you can be on the hook. So there is a little bit of risk there. The other thing that I should have mentioned back at the beginning on what's unacceptable is law, right? So if you have lawsuits going on, if you're at risk of, it's hard to judge whether or not somebody's at risk of having a lawsuit come at them. But I mean, if you're constantly in lawsuits, constantly battling people, stuff like that could also hinder even your client, right? Not just their client, but you. What else makes this program powerful is approvals are more subject to your client's credit and situation than it is, right? So if you have credit concerns and you're struggling getting approved anywhere else because your credit, like if you're sitting at 500, 550, which it happens, I can set you up with credit repair people if you need. But if you're sitting at like 500, 550 or whatever, you're not liking the approvals that are coming back. You're not liking the terms that are coming back. This is another way to kind of circumvent that, right? Mitigate that, play damage control. What's needed to apply? I will get used to this eventually. Whoops. I meant to hit bold. Okay, the bold button doesn't work. That is cool. Just learned something new today, guys. What's needed to apply? 3 months business bank statements, right? Of course, they want to see cash flow going. They want to see cash flow that's going in your account. Sample contract or agreement. largest 3 clients, right? They're going to want to know that. Who are you working with? Who are your largest 3 clients? They're going to want an application form. So whatever that is, you can use one of ours. We've got a number of different factoring companies we could set you up with. Business tax return. And I think that's, aging, AR. So they're going to want to check out your accounts receivable and your accounts payable, right? They're going to want to make sure that overall your clients are pretty good at paying on time. If you're working with a bunch of crappy people who don't like to pay on time, if you've got a lot of delinquent accounts sitting on your books and stuff, that's high risk that could affect your approval or not, right? I think that pretty much covers it. I mean, it's pretty simple. As you can see, it can be a very powerful program. For the right person, it's a very powerful program. For the right business, it's very powerful. It gives you the cash injection that you need, and the application process takes around 3 to 7 business days. I'm not even going to say application process. So the process could take 3 to 7 business days for funds, right? Really depends on underwriting, how clean the paperwork is, how efficient everybody's communicating with each other, that kind of stuff. It can get done in 3 to 5 days on the low end. It could take up to 7 business days on the high end. But here's the thing. Once a credit line is approved, it really only takes 1 to 3 days. So what's going to happen is if you have an invoice, a lot of these companies, they have a lot of the lenders, they have like online portals and stuff like that. So you just go in, you submit your invoice, and funds can hit same day, depending on how it's transferred, right? Whether it's ACH or whatever the deal is, it can hit same day. It can take up to 3 days in order to hit from there, right? Depending on how it's transferred. So like a line of credit, just like a line of credit from there, right? It's quick, it's easy. Just instead of making a draw, you need to give your invoice in order to draw from. That's what I got for you guys. I hope you guys have a wonderful Friday. Thanks for tuning in. Of course, I appreciate you guys as always, and I look forward to seeing you guys on another video. Cheers. Thank you for tuning in. I appreciate you taking time out of your busy schedule to spend some time and tune into this message. If you enjoyed this, please show some love with a like, share, or by leaving a comment review wherever you happen to be tuning in. Don't forget to join us on the Facebook group, Business Owners and Entrepreneurs Network, and head on over to eliteclarity.com to check out our financing options. Cheers.